Hello, it's Robert Miner with Dynamic Traders Group with our daily 3-minute DT update and trade strategy. We're going to take a close look at a couple of markets that appear to have, coming up this week, some great trade setups. We're going to give you the specifics of what the market has to do to initiate that trade setup. As usual, even if you don't trade the markets we talk about here, you can learn something and how to apply what you learn to other markets and other time frames. Okay, let's get started. Let's first take a look at crude oil. Even if you don't trade crude oil, a lot to be learned from this market at this time, and it'll be interesting to be aware of a potential major trend in crude oil. This is crude oil weekly data, and from the June low, we had this 5-wave advance. That'll show up better when we look at the daily data, and then we had a potential ABC correction. What's important is last week, crude oil made a weekly momentum bull reversal from the oversold zone. That's a very reliable indicator once it makes the bull reversal that a weekly low is complete, and that's usually followed by 3 to 5 weeks sideways to up. And if this had been an ABC correction, what follows a correction? Well, continuation of the prior trend to new high. In this case, if you're familiar with Elliott wave, this would have been a 1 or A advance. This would be a 2 or B advance, and we'd probably have a 3 or C advance to a high above the July high. So keep in mind that trading is not about forecasting the future. It's about identifying conditions with a high probability outcome based on whatever technical analysis, whatever you use technical analysis wise to view the market. At Dynamic Traders Group, we use time, price, pattern, and momentum, and we use them in multiple time frames. So here's the daily data for crude. Again, it clearly shows this 5-wave advance, potential A, B, C. So those of you who are Elliott wave academics are going to say, wait a minute, can't be an A, B, C decline because this wave C extended beyond the beginning of the advance, the June advance. It has to be something else going on here. Plus, it even made a new lower close. This was the low close of June, and we made a close below that on this one big down day. Well, with Elliott wave, which was formulated and developed, that whole strategy of the patterns and all with the stock market, in commodities, there's some overthrow frequently from what the guidelines recommend for or state for Elliott wave, and partly because they have a more narrow range of participation, and partly because they're futures markets. So I look at this at what would the trend be, what would the position be if we ignored this one day where it poked to a new low and came back up and never had no follow through on that day. If we eliminated that day, it would be almost ideal, A, B, C. And then last Tuesday, we closed strongly into the closing range of the wave A. That indicates this is probably not a bearish impulse pattern. It's probably a correction. We're always dealing in probabilities. So if we're looking for an opportunity with a high probability outcome and acceptable capital exposure, we're looking at a potential weekly trend to the upside that's just in the initial stages with the potential for making a new high. Daily momentums are bearish, but the setup would be following the next daily momentum bull reversal, as long as that's made with price above the August low. And given that the fast line has already reached the oversold zone, we should be within anywhere from 1 to 3 days of making a daily momentum bull reversal. That's going to be an ideal dual time frame momentum setup to continue the bull trend, and we're going to be able to participate in this with very minimal capital exposure, so in case we're incorrect. So you can use leveraged futures or you can use an ETF, either one. ETF, of course, would be unleveraged, pretty much follows crude point for point, and it's a great vehicle because you can take a fairly small position, so you can always position yourself with minimal leverage and minimal capital exposure to get in on a trend in the early stages, and then you can add to that position if the trend progressives. So that's what we're looking at over the next few days. Here's the 240-minute data. It just more clearly shows this 5-wave advance. in the first half of August. Potential A, potential B, and certainly trade over what I got labeled a wave B high, which would be Friday's high, is the first signal that we're probably can continue on the upside. Of course, we need that daily momentum bull reversal to continue for that. By the way, if you're interested in updates on the stock market or gold, they're going to have very interesting weeks, I think. Check out our DT reports. Got one more market here to take a look at, and it's soybeans. I love trading soybeans because once a trend gets underway, you usually have several weeks of pretty consistent trend, relatively low capital exposure, really good trade setups. Soybeans is looking almost exactly like crude. Daily momentum's made a bull reversal, possible ABC correction to the 62% retracement this 2 weeks ago. And here we are. This look a lot like soybeans. Again, we've probably coming off about 2 weeks ago, 1, 2, 3, 4, 5. It's probably a wave 1. We're probably making a wave 2 correction as long as we make that DT oscillator bull reversal with price above the August low. What a great setup for a long trade that may continue to a new high. And I realize there's a lot of volatility and has been in this market because of the tariff talks and all of that. So we really want to position with minimal capital exposure. But if we're looking at the technicals, boy, it looks like a great setup here in the next couple, 3 days on a bull reversal. So be looking for these 5-wave advances, 3-wave declines. All corrections aren't simple ABCs, but you can apply this to a lot of different time frames and a lot of different markets. Here is the again, the 240-minute data in soybeans. Just a beautiful 5-wave advance. Potential ABC correction. That's right at the 61.8% retracement here. The furthest downside should be around 865. That's the 100% alternate price projection. What I'll be looking at come early next week is the next 240-minute momentum bull reversal. And if that's made with price above Thursday's low, boy, that'll be a setup with just really small capital exposure for the long side. So I'm not forecasting what's going to happen in either of these markets, simply recognizing that they're in a position to continue a potentially multi-week, maybe multi-month trend, and I can participate in that with minimal capital exposure. And of course, there's an ETF for soybeans as well, so you can get 100 shares of the ETF. Really small position with really small capital exposure, and if the market goes your way and we take out this what I got labeled a wave 1 or a high, you can add to that position. You'll have a little bit of cushion there of potential or some open profits anyway, and have a cushion so that you can add to that position as the market continues. That's it for today. Hope you have a fantastic weekend. Check out our DT reports if you want daily updates on all the major financial markets. Take care.